Welcome to Academic Gain Tutorials. In this video, we will look into the differences between mortgage and hypothecation. Mortgage refers to a legal arrangement wherein there is a transfer of interest in a particular immovable asset or property by the owner, so as to secure the payment of funds raised via loan on present or future debt or performance of an obligation, which may result in a financial liability. The term hypothecation is used to define a charge formed on any movable asset by the owner to raise funds from the bank without transferring the ownership and possession to the lender. In this agreement, the borrower or owner of goods borrows money against the security of assets or inventories. So, let's look into the basic differences between mortgage and hypothecation in a tabular form. Difference number 1: an arrangement wherein a person borrows money from the bank by collateralizing an asset without transferring title and possession is called hypothecation, whereas a legal agreement wherein the title of real estate property passes from the owner to the lender as collateral for the amount borrowed is known as mortgage. Number 2. Hypothecation applies to movable assets only like goods, vehicles, etc. On the other hand, a mortgage is applied to immovable property such as land, flat, shop and so on. Number 3. Hypothecation agreement is the legal document in hypothecation. As against this, the mortgage deed is the legal document which effects the transfer in case of a mortgage. Number 4. The term mortgage is defined under Section 58A, Transfer of Property Act, 1882. Conversely, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, 2002. SAFC Act defines hypothecation. Number 5. In a mortgage, there is a transfer of interest in the asset, unlike hypothecation is a security for payment of an amount. Number 6. The loan amount is comparatively higher in the case of a mortgage than in hypothecation. And, difference number 7. In general, the tenure for which the funds extended to the borrower by the bank is longer in mortgage than in hypothecation. In spite of some differences, the two forms of the charge share some common characteristics, in that both provide security to the loan and the possession of the asset remains with the borrower of the asset, while the lender has the first right to it until the dues are cleared. Further, in both the cases, if the borrower defaults in payment, the lender can recover the amount by selling the asset. Comparing the two types of charge, mortgage is better than hypothecation in terms of safety because in mortgage the charge is created over land, building or house, etc. whose value appreciates with time, whereas in case of hypothecation charge is set up on car, stock, etc. and such assets do not appreciate with time. So, these are the differences between mortgage and hypothecation. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.